A lot of times I get asked, Albano, what should I get? An FHA loan, a conventional loan? Which is right for you? Which is right for me? Which is right? Everybody's asking me the same question. Well, if you want to know, please watch the next video.
Mortgage, 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 mortgage. Everybody wants to know about a mortgage. This is Chris the Mortgage Pro, and people ask me all the time, should I go with an FHA loan or should I go with a conventional loan? What's the difference? I'm going to tell you. Okay, let's begin here. A conventional loan, if you have a large down payment, and by large, I mean 20% or more, is always going to make the most sense if you have that down payment. So let's start with the premise that you don't have a huge down payment. Let's say you're looking at 3 to 5%, something like that, even 10%. Well, it makes a difference how much you put down, but it also makes a difference with what your credit score is. So let's start at the beginning. If you're looking at a 3 or 5% down conventional loan, if you have a high FICO score, it might make sense to go with a conventional loan. If you have a lower FICO score, I'm talking below 680, it's probably almost an insurance that you're going to save the most money monthly by going with an FHA loan. So we're going to talk about a couple of different options. Watch this. Okay, let's start with a down payment. There are 3% and 5% down conventional loans. FHA always requires a minimum of 3.5%. So if you fall into the conventional loan category, and sometimes people want to buy a condo, but there's a problem. Condo is not FHA approved. You have to go to the conventional side. So let's take a look at a 3% down conventional loan. It could actually be cheaper monthly than an FHA loan. How is that possible? Well, first of all, the rate is higher on a conventional loan than on an FHA. Well, how does that work? Yes, the rates are different, but the mortgage insurance, if you have a high FICO score, could be cheaper on a conventional loan. For an FHA loan, you're looking at a PMI rate of 0.0085. With a low FICO score, you're going to pay higher than that on a conventional. With a high FICO score, you're going to pay lower. And it could make such a significant difference that it makes more sense to go with the conventional loan. Now, here's another distinct advantage of a conventional loan. With a conventional, once you reach a point where you have 20% equity, whether you've paid the house down 20% or the house has appreciated 20%, which you can prove to the lender with an appraisal, we can get rid of the PMI altogether. That's a big deal. On an FHA loan, it's stuck with you. If you're putting 3.5% down, you're going to be paying that for as long as you have the FHA loan, no matter how much equity you have. That's a change that just happened a couple of years ago, but you have to be aware of that. Here's an option with a conventional loan that's just not available with an FHA loan. If you have a high FICO score, because it never makes sense with a low FICO score, but if you have a high FICO score, you can buy with a conventional loan only. You can do a lump sum PMI buyout. It's usually about 4 years worth of monthly PMI payments, but if you pay that lump, you never have to pay monthly PMI on that loan ever again. Sometimes it's very important where we need to look at the debt ratio and lower the debt ratio down considerably, and that's a way to do it. Here's another advantage to a conventional loan. With an FHA, you actually pay 1.75% of the loan amount as what's called upfront mortgage insurance, and it's added right on top of your loan amount. With conventional, there is no mortgage insurance up front. So as an example, on a $300,000 loan, 1.75% is $5,275. So you're going to borrow $5,275 more with an FHA loan than you will with conventional. Now, with an FHA loan, there is a distinct advantage for those of you who don't have fantastic credit. Here's the advantage. Really simple, but you got to know this. FHA with a 580 FICO score, 3.5% down, you could buy a home. Below 580, if you put 10% down, yeah, 500 to 579, believe it or not, you could still buy a home. A conventional loan requires a minimum of a 620 FICO score, and boy, if you're at 620, that that rate's going to jump. Now, with a conventional loan, obviously we need an appraisal with either loan, but with a conventional loan, the property they're much more flexible with. With an FHA requires that the property be in livable condition. That means if the kitchen's missing and you're buying, saying, hey, I'm going to put in my own kitchen, I'm going to save some money by doing it this way, and I'm going to buy a cheaper house. You can't do that with an FHA loan unless you're buying with a specific loan called an FHA 203K. Other than that, you got to look at conventional if the house is a wreck, but you still want to buy it. With both an FHA and a conventional loan, gift funds are allowable for the down payment. Hey, that's a big deal. Maybe mom, dad, cousin Charlie, maybe they can gift you the money for the down payment. Maybe you got 10 relatives who are going to gift you $1,000 each. Hey, what a great wedding present or whatever it is for you. But that is an available option that most people don't think about. Now, super important to understand that there are special Fannie Mae and Freddie Mac conventional loan programs for first-time home buyers, and they're called a Home Possible and a Home Ready. Now, they give you a discounted interest rate, a discounted PMI rate, which could definitely lower the rate and the monthly payment lower than an FHA loan. However, they do have maximum incomes. Now, certain areas, and they're usually more underprivileged type areas, there's no maximum income. But most areas do. Here in California, I find a lot of times it's about $65,000. So if the family income is above that, well, you're going to go with the standard program. But if it's below, hey, we might be able to save you a whole lot of money. Hey, if you like this video, do me a favor, hit the like button. You can subscribe. I got lots of great tools for you. But here's what I'd like you to do. If you want a real analysis, not a guessing, if you want a real analysis, myself or one of my affiliates, one of my pros that I work with will help you evaluate which one's best for you. There's a number of different factors. Stop guessing. Start knowing. Call me up, 310-350-2546, or send me a text. I'm happy to help you. I don't care what part of the country you're from, I'll have somebody licensed in your area help you out, and together we're going to fire your landlord.